All right. Welcome in, everyone, to the Deep Dive. I'm Steve.
And I'm Evie.
And we are ready to dive into another company today that I think is on everyone's minds these days.
Absolutely.
Tesla.
Yeah, it's in the news constantly.
I think it's probably in most of our listeners' portfolios, some way, shape, or form, or at least on their watch list.
For sure.
And you, our listener, have sent in a really, really comprehensive set of sources, company filings, their website, industry reports, articles, the whole 9 yards.
Yeah, it's great.
So our goal today is to kind of synthesize that for you.
Right.
Pull out the truly important stuff and break down what Tesla is, how they make their money, what are their advantages over the competition, their so-called moat, where they see their growth coming from.
Right.
And crucially, what are the potential pitfalls?
The risks.
Yeah, the risks involved.
Absolutely.
So think of this as your express lane to a well-informed understanding of Tesla.
Sounds good.
Okay, so let's unpack this, starting with the basics.
Okay, so just to be clear on the name, it is Tesla Inc. legally.
Inc.
Yeah, but it started out as Tesla Motors.
Okay.
And just a quick point on pronunciation. I know we hear it both ways, Tesla and Tzilu, but the name of Nikola Tesla, their namesake, is actually Tesla.
Tesla. Okay, got it.
Yeah.
So Tesla Inc. It's an American company, right?
Right. It's an American multinational company.
Multinational, okay.
In the automotive and clean energy spaces.
Okay, and they're based in Austin, Texas these days.
They are, yeah.
But it's important to note that they're not just making electric vehicles.
That's right, yeah. They're doing a lot more than just EVs.
Yeah, so tell me a little bit about that.
So yeah, their core business is definitely designing, manufacturing, and selling battery electric vehicles. So those are the BEVs you hear so much about.
Oh, the BEV.
But they're also really big in stationary battery energy storage.
Okay.
So like the Powerwall that you see for homes, and then larger scale solutions for, the grid. And they also do solar panels and solar shingles and a whole suite of related products and services.
Right, and one of the excerpts that you sent in actually talks about them producing clean energy from your roof.
Yeah. Exactly.
So they're very much into that whole ecosystem.
Whole ecosystem, yeah.
Okay, now we all think of Elon Musk when we think of Tesla.
Of course, yeah.
But the history goes back a little further than that.
It does.
So your sources indicate that it was actually founded in July 2003 by Martin Eberhard and Mark Tarpenning.
That's right.
As Tesla Motors. So this is before Elon.
Yeah, Elon actually came in a little bit later.
Right.
He led the first big investment round in February 2004 and became chairman.
Okay.
And then in 2008, he took over the CEO role.
Oh, wow. So he wasn't there at the very, very beginning.
No, not the very beginning, but, very, very early on.
Yeah, okay. And they've launched a lot of vehicles since then.
A lot of vehicles, yeah.
We saw the Roadster in 2008.
That was the first one, yeah.
Then the Model S in 2012.
Which I think was really groundbreaking.
Yeah, Model X in 2015, Model 3 in 2017, the Model Y in 2020.
Yeah.
And more recently, the Semi in 2022, and the Cybertruck just last year in 2023.
Right. And I think it's amazing how far they've come.
It's crazy.
Yeah.
And I think it's interesting, one of your sources pointed out that the Roadster, the initial production, was actually done in a former Chevrolet dealership in Menlo Park.
I know, isn't that interesting?
It's really funny.
Yeah, and it kind of shows you how scrappy they were in the beginning.
Yeah, exactly, yeah.
Also worth mentioning, I think, is that $465 million loan they got from the U.S. Department of Energy back in 2009.
Oh, right.
Which they paid back in full with interest by 2013.
That's impressive.
Yeah, it really is.
Okay, so moving along, to further their clean energy ambitions, Tesla made a big move in November 2016 when they bought Solar City.
Oh, yeah. Big move.
For $2.6 billion in stock.
That's a lot of money.
That's a lot of money.
Yeah, and it basically meant that they were merging Solar City with their existing battery storage division to form Tesla Energy.
Right.
And then to reflect this broader focus, beyond just cars, they changed their name officially to Tesla Inc. in February 2017.
So they're not just a car company.
No, not anymore.
They're an energy company.
Exactly, yeah.
Okay, so that gives us a good foundation, I think, of what Tesla is.
Yeah, the basic.
But now let's get into the nitty-gritty. How do they actually make money?
Show me the money.
Right. What's their business model?
Right.
And obviously, selling electric cars is a huge part of it.
Oh, absolutely. I mean, that's their bread and butter right now.
Yeah.
Selling those battery electric vehicles.
Yeah. So tell me about that.
Well, they're the global leader in EV sales.
Wow.
And in 2023, they had a 19.9% market share
Wow.
with 1.8 million vehicles delivered.
That's huge.
That's a lot of cars.
Yeah.
And that's actually a 38% increase from the year before.
Wow.
So they're growing rapidly. And just this past March, they hit a major milestone. They produced their 6 millionth vehicle.
That's a lot of vehicles.
It is a lot.
But as we touched on, they're not just an EV company. They're doing all this other stuff too.
That's right, yeah.
And, we talked about energy storage being another piece of that.
Yeah, so their stationary battery energy storage is becoming a really important part of their business.
Okay.
So we're talking about things like the Powerwall for homes, but also the larger scale Megapack and Power Pack for commercial use and, for the power grid.
Interesting. So it's not just individuals, it's also businesses and even utilities
Exactly.
that are buying these.
Yeah, they're finding a lot of applications for these things.
Wow.
Yeah, and then they've also got their solar panel and solar shingle business.
Right.
Which, some of the reports you sent in actually said the installations have dipped recently.
Really?
But the battery business is booming.
Interesting. Okay, so it sounds like a little bit of a mixed bag in the solar world.
It does, yeah. It's definitely an evolving market.
Okay.
And then, of course, we can't talk about Tesla without talking about their Supercharger Network.
Right, which is massive, by the way.
It is huge. They've got over 7,000 stations and more than 65,800 connectors all over the globe.
Wow.
As of January 2025.
That's a lot of infrastructure.
It is, yeah. And that's only going to grow.
Right. And do they make money off of that, or is that just a service to their customers?
Well, right now it's mainly a service, but it's starting to become a really important revenue source, especially as more and more other EV makers are adopting their North American charging standard.
The NACS.
Yeah, exactly.
So starting in 2025, pretty much every other major EV maker in North America is going to be using the NACS connector.
Right. So Tesla's network could become like this massive toll road for a huge chunk of the EV market.
It's kind of genius.
It's a really smart strategy.
And they're not stopping there. They're also upgrading the power output of these stations. So there's even more potential for revenue there.
Yeah.
And usage.
Yeah, and usage.
Yeah.
They're also expanding their destination charging network.
Right, which is a little bit different.
Yeah.
So they've got this partnership with Hilton to install 20,000 chargers by 2025.
Wow. At their hotels, I'm assuming.
Exactly, at their hotels.
So really trying to be everywhere that a Tesla owner might want to go.
Exactly. They want to make it super easy to charge wherever you are.
Yeah. It's almost like they're becoming the gas station of the future.
Yeah, that's a good analogy
for electric vehicles.
For electric vehicles, yeah.
Okay, so then there's another interesting thing that they're doing that I think maybe a lot of people don't know about.
Oh, yeah.
Tesla Insurance Services.
Mm-hmm.
So they started this back in 2017, and then in 2021, they became an independent producer.
Right.
What does that even mean?
Basically, it means they're selling their own insurance policies now.
Okay.
But the interesting thing is that they're using their knowledge of their own cars to give really personalized pricing.
So like in some states, they actually use real-time driving data to adjust premiums based on how safe you're driving.
So if I'm a good driver,
you pay less?
I get a discount.
Exactly.
That's pretty cool.
Yeah, it's a really unique approach.
It is. And right now, it's only available in a few U.S. states.
Right. But they're expanding.
Okay.
Yeah. And they're also now covering non-Tesla vehicles that are owned by Tesla owners.
Oh, interesting. Okay, so even if you have another car,
you can still get Tesla insurance.
You can still get it. Wow, that's pretty smart.
Yeah, it's a good way to broaden their customer base.
So it seems like they're trying to monetize their ecosystem in every way possible.
They definitely are, yeah.
I know you mentioned the premium connectivity subscription.
Oh, right. So that's like $10 a month.
Oh, wow. Okay.
And it gives you access to all these extra features in your car, like streaming music and live traffic updates.
So even after you've bought the car,
they're still finding ways to make money.
They're still making money.
Yeah, recurring revenue.
Yeah, okay. And then we can't forget the regulatory credits.
Oh, yeah. Those have been a big deal for Tesla.
Yeah.
So they've gotten about $11.4 billion from the federal and state governments in the U.S.
Wow.
That includes the $7,500 federal tax credit that used to be available for customers.
Oh, right.
But that's ended now.
Okay.
But they also get credits from the Chinese government.
Got it.
And these credits are basically because they're selling zero-emission vehicles.
Yeah, it's like a reward for being green.
Exactly.
And they can sell these credits to other car companies that don't meet the emission standards.
That's right.
So it's been a pretty good source of income for them.
It has been, yeah. Although it can be a bit unpredictable.
Right, because the regulations are always changing.
Exactly.
Okay, so we've talked about how they make money, a lot of different revenue streams.
Yeah.
What about their competitive advantages, their so-called moat?
The moat.
Is it widening? Is it shrinking? Is it staying the same? What do we know?
So yeah, that's a really important question when you're looking at a company, can they stay ahead of the competition?
Exactly.
And one of the things that Tesla has always been really strong at is battery technology.
Okay.
So they were the first to really use those cylindrical lithium-ion cells in a big way, starting with the 18650 format.
Okay.
And now they're using the 2170 and even their own internally developed 4680 cells.
So they're not just buying batteries, they're making them too.
Exactly. Yeah, they've got their own battery production facilities.
Okay.
And back in 2021, their battery pack costs were estimated to be way lower than the industry average.
Right.
Like $112 per kilowatt hour versus the average of $132.
That's a big difference.
It's huge. Yeah, it gives them a real cost advantage.
Okay.
And they're really smart about sourcing their battery chemistry from different suppliers.
Okay.
So they get some from Panasonic in Japan and Nevada,
Okay.
some from LG Energy Solution in China.
Got it.
And then, of course, they're making their own 4680 cells in Fremont. And they're planning to expand that to Nevada and Texas as well.
Okay.
So they're really diversifying their supply chain.
Yeah, smart.
So yeah, I think the key takeaway is that their early investment in battery tech is really paying off now.
Yeah, they were ahead of the curve, for sure.
Yeah.
And then there's NACS, which we touched on earlier, the charging standard.
Right.
That seems like a real game changer.
It really does, yeah.
Because if they become the standard, then everyone else is going to have to play by their rules.
Right, exactly.
Well, it's not just about their cars, it's about the whole charging infrastructure.
Yeah, and it creates this network effect where the more people use their chargers, the more valuable it becomes.
Exactly. So it's like a snowball rolling down a hill, getting bigger and bigger.
Yeah, exactly.
Okay, so what about the software side of things? I know their over-the-air updates are a big deal.
Oh, yeah, that's a huge differentiator for them.
How so?
Well, basically, it means they can continuously improve their cars even after they've been sold. So, like, they can add new features, fix bugs, even improve safety features all remotely.
So my car is literally getting better while I sleep.
Exactly. Yeah, it's like magic.
That's crazy.
Yeah, and it keeps their cars feeling fresh and up to date.
Yeah, I mean, no one else is really doing that to the same extent.
No, not really. I mean, some other car companies are starting to do it, but Tesla's been doing it for years.
Yeah, and they're the best at it.
Yeah, I think so.
And it's got to be good for customer loyalty, too.
Oh, absolutely, yeah. I mean, if your car is constantly getting better, you're going to be happy with it.
You're going to want to stick with it.
Yeah, and you're less likely to switch to another brand.
Right. Okay, so what about their electric motors?
Well, they design and build those in-house, too.
Really?
Yeah, so initially they were using induction motors,
Okay.
but now they're also using IPM Cinerem motors in some models.
What does that mean?
Basically, it means they're more efficient,
Okay.
so they can get more range out of the same battery. And by doing everything in-house, they have a lot more control over the performance and the cost.
Makes sense.
Yeah.
And then there's their sales model, which is really unique.
Oh, yeah, the direct-to-consumer model.
Yeah, they don't have dealerships.
No dealerships.
Which is kind of crazy.
Yeah. It's very different from the traditional car industry.
Yeah, so how does that work?
Well, you basically buy the car online or at one of their Tesla stores.
Okay.
And they handle all the financing and delivery themselves.
Interesting.
Yeah, and it gives them a lot more control over the customer experience.
I guess so. They're not relying on third parties.
Exactly.
But I imagine that's caused some friction with the traditional dealerships.
Oh, yeah. There's been a lot of pushback from the dealership associations.
I bet.
But Tesla's arguing that it's better for the customer.
Yeah, I mean, I can see how it would be more streamlined.
Yeah, and it potentially saves money, too.
Right. Okay. And then finally, let's talk about their manufacturing.
Oh, yeah. They've been really innovative in that area.
Yeah, so they've been buying up automation firms, and they're using these huge gigapresses to make parts of their cars.
Yeah, it's amazing.
Yeah.
So those gigapresses can cast really large parts of the car frame in one piece.
Wow.
Which reduces production costs and simplifies assembly.
So they're making cars like giant Lego sets.
Kind of, yeah. It's
Yeah.
a really cool approach.
It is. And are other car companies doing this?
Well, they're starting to take notice,
Okay.
and they're trying to adopt some of the same techniques.
Makes sense.
Yeah,
So it seems like Tesla is really pushing the boundaries in a lot of ways.
they are. Yeah, they're constantly innovating.
Okay, so we've talked about their advantages.
Mhm.
What about growth opportunities? Where do they see themselves going in the next 5, 10 years?
So there's a lot of potential for growth for Tesla. The
Yeah.
biggest one, I think, is just continuing to expand their vehicle production and sales.
Okay.
So growing in their existing markets and entering new ones.
Right.
Now they have faced some challenges recently in Europe. They've had some sales declines in the EU and the UK in early 2025.
Really? What's driving that?
It seems like competition is heating up,
Okay.
especially from those Chinese EV makers.
Right. Right. We've been hearing about that.
Yeah, they're becoming really strong contenders.
So Tesla's not the only game in town anymore.
No, not at all.
Okay, but they're still doing well in other markets,
Oh, yeah.
like China.
China is their second biggest market.
Okay.
And they're also strong in Germany, France, and Canada.
Got it.
So there's still a lot of room for growth globally.
Yeah. Okay. And what about energy storage? We talked about that earlier. Is that a big growth opportunity?
Absolutely. Yeah, I think that's a really exciting area for them.
How so?
Well, with the whole world moving towards renewable energy and the need for grid stabilization,
Right.
the demand for their Powerwall, PowerPack, and Megapack products is just going to keep growing.
Makes sense.
Yeah, so they're really well positioned to benefit from that trend.
Okay. What about solar? I know that's been kind of a mixed bag for them.
Yeah, but the long-term potential for solar is still huge.
Okay.
I mean, energy prices are going up and governments are starting to offer more incentives for solar.
Right.
So I think it's just a matter of time before that business really takes off.
Okay. Now, one thing I've always heard about but haven't really seen come to fruition is the Tesla network.
Oh, yeah, the ride-hailing service?
Yeah. So what's going on there?
Well, they're definitely working on it.
Okay.
In October 2024, they actually unveiled some concept vehicles.
Oh, really?
Yeah, the Cybercab and the RoboVan.
So they're thinking about not just selling cars, but also running a taxi service.
Exactly, yeah, like a self-driving taxi service.
Oh, wow. That's a pretty big shift.
It is, yeah.
So what's the holdup?
Well, I think there are a couple of things. First of
Okay.
all, they need to get the technology right.
The self-driving.
Yeah, the full self-driving, and that's proving to be a lot harder than they initially thought.
Right.
And then there's the regulatory side of things.
Of course.
I mean, governments are going to have a lot of questions about safety and liability.
Yeah. I mean, putting self-driving taxis on the road is a pretty big deal.
It is, yeah. So it's going to take some time to work through all of those issues.
Okay. But if they can pull it off,
It could be a huge business.
it'll be revolutionary.
Yeah.
Okay. And then there's Optimus, their humanoid robot,
Oh, yeah.
which seems like something straight out of science fiction.
It does, yeah.
But they unveiled a prototype back in 2022.
They did.
So what's the latest on that?
Well, it's still in development,
Okay.
but the idea is that it would be this versatile robot that could do all sorts of tasks.
Like what?
Well, they're talking about using it in manufacturing, logistics, even in homes.
So it could do my chores?
Maybe one day.
Wow. Okay. So is this like a real product or just a research project?
Well, I think it's somewhere in between right now. I mean, it's definitely a real product that they're working on,
Okay.
but it's probably still years away from being commercially available. But it does show their ambition, you know? They're not just thinking about cars.
Yeah. They're thinking about the future of work.
Exactly.
Okay. So we've talked about global expansion, energy storage, solar, the Tesla network, humanoid robots.
Mm-hmm.
Is there anything else?
Oh, yeah, there's more.
Okay.
So they're also working on a next generation vehicle platform.
Okay.
And the goal there is to produce smaller, more affordable EVs.
So even cheaper than the Model 3.
Yeah, potentially.
Oh.
So that would allow them to compete in a much bigger market segment.
Right, right. Because right now they're kind of in the luxury market.
Yeah, they are.
But if they could make a truly affordable
That
EV.
could really disrupt the industry.
Yeah.
And then we talked about the Supercharger Network.
Mhm.
But as they open that up to other EVs,
Mhm.
that's another big growth opportunity.
Yeah, it could become a major revenue source.
Right,
And then there's Tesla Insurance, which they're expanding to more states.
right.
And finally, they're building a lithium refining facility in Texas.
Which is going to give them more control over their supply chain and hopefully lower their battery costs.
So vertically integrated.
Exactly.
They're trying to do everything themselves.
Yeah, they really are.
Okay, so a lot of exciting possibilities.
A lot of potential.
But as with any company, there are also risks.
Oh, absolutely. There are always risks.
So what are the big ones for Tesla?
Well, on the technology side, getting to level 5 autonomous driving is proving to be a real challenge.
Yeah, they've had some delays.
Yeah, a lot of delays.
Okay.
And then there's the cybersecurity risk.
Right, because their cars are basically computers on wheels now.
Exactly, yeah. So they're vulnerable to hacking.
Okay.
And then there's always the risk that someone else will come up with a better technology.
Right, they're not the only ones innovating.
No, not at all.
And we've talked about competition,
Yeah, that's a big one.
particularly from China.
Mm-hmm.
And that's already starting to impact their market share.
Yeah, in Europe especially. And then they've also had some problems with production and delivery delays in the past.
Right. I remember hearing about that.
Yeah, it can be hard to scale up production that quickly.
Yeah, and it can frustrate customers.
Absolutely.
Okay, what about safety and regulatory concerns? Is that a big risk?
Yeah, that's a constant concern for Tesla.
Right.
I mean, the safety agencies like NHTSA are always looking at their autopilot and full self-driving features.
Right.
And there have been accidents involving those technologies.
Yeah, which have made headlines.
Exactly.
So they're under a lot of scrutiny.
They are, yeah. And they've also had a lot of recalls.
Really?
Yeah, for various safety issues like touchscreen failures, suspension problems, even software glitches.
Wow. Okay, so it seems like they're still working out some kinks.
They are, yeah. And then there were those investigations into battery fires.
Oh, right.
Which really highlighted the potential dangers of that technology.
Yeah, batteries can be dangerous.
They can be.
Okay. And then there's all the controversy surrounding Elon Musk.
Oh, yeah. He's a very polarizing figure.
He is, yeah.
And sometimes the things he says and does can reflect negatively on the company.
Right. He's kind of a wild card.
Yeah, you never know what he's going to say or do next.
Okay. And we talked about the dealership disputes.
Yeah, that's an ongoing battle.
And lawsuits.
Yeah, there have been quite a few lawsuits.
Related to autopilot accidents and workplace issues.
Yeah, including allegations of sexual harassment.
So not just about the cars, it's also about how they treat their employees.
Exactly.
Okay, and what about labor relations? I know there have been some issues there.
Yeah, they don't have any unions in their U.S. factories.
Okay.
And that's been a point of contention.
Right.
And then there have been strikes at their factory in Germany.
Really?
Yeah, and even sympathy strikes in other Nordic countries.
Wow, okay, so things are getting a little heated.
Yeah, a little bit.
Okay, and then there's the use of NDAs.
Right, so non-disclosure agreements.
Which basically prevents employees from talking about what goes on inside the company.
Exactly, yeah.
Okay, and some people see that as a lack of transparency.
They do, yeah.
Okay, and then finally there's board governance.
Right, so there have been some concerns about the makeup of their board of directors.
Okay.
Specifically, that there aren't enough independent directors and people with experience in the car industry.
So too many people connected to Elon.
Yeah, that's the perception.
Okay, and investors don't like that.
No, they don't.
Because they want to see a board that's going to hold the CEO accountable.
Exactly.
Okay, so a lot of risks to
There's
consider.
a lot of risks, yeah.
But also a lot of potential.
Definitely.
So it's a really fascinating company to watch.
It is, yeah.
Okay, well, this has been a truly insightful deep dive into Tesla. I think we've covered a lot of ground here.
We have, yeah.
We've gone from their origins to their business model, their competitive advantages, their growth opportunities, and the risks that they face.
The whole picture.
Yeah, and hopefully you, our listener now, have a much better understanding of this complex and dynamic company.
Yeah, I hope so.
Totally. And I'm not gonna lie, sometimes
Going through these filings?
it can feel like, I don't know, like climbing Mount Everest or something.
Been a lot.
Hundreds of pages. But that's what we're here for.
Your Sherpas, basically.
Yeah, we'll guide you through it.
Peaks and valleys, all that.
So, where do we want to start with this financial Everest?
Well, I think a good base camp is to just, get a grasp on the overall financial health, big picture.
Okay, sounds good.
The 10K for 2024 gives us a full year, right? And then those 10Qs. They're like quarterly snapshots, see how things are moving.
Right, get the momentum.
Exactly. So let's just start right at the top. Revenue. How much money did Tesla actually bring in?
Yeah, spill the beans.
Hmm.
Did they have a good year sales-wise?
Well, according to the 2024 10K, their total revenue came in at, $97.690 billion.
Okay, that's a pretty big number.
It is. And it's actually slightly higher than their 2023 revenue, which was $96.773 billion.
All right, so they're still growing.
Yeah, but it's interesting, though, that year-over-year growth, it's a bit slower compared to, the jump they had from 2022 to 2023.
Oh, how much did they make in 2022?
Back then, it was $81.462 billion.
Okay, so the pace is slowing down a little.
A bit, yeah, but still upward.
Interesting. And geographically, you said.
Oh, yeah. The U.S. market is still their powerhouse, strongest performer.
Okay, so they're still selling a lot of cars,
Yeah.
but the growth is maybe not quite as crazy as it used to be.
Yeah.
Makes sense. Now, what about the bottom line? Are those sales actually turning into profit?
Well, this is where things get a little bit more nuanced.
Okay.
If you look closely at the provision for income taxes in that 2024 10K, there's this wild swing.
A swing? How so?
Well, in 2023, they actually had a tax benefit. It was like $5.001 billion, like finding a huge wad of cash you forgot about.
Nice.
Right. But then in 2024, it completely flipped. They had a tax expense of $1.837 billion.
Ouch, that's a big difference. What happened?
So the filings, especially that September 2024 10Q and the 10K, they explain it's mostly due to this thing called the release of a valuation allowance.
A valuation allowance. What is that?
Well, it was on their U.S. deferred tax assets.
Okay, I'm already lost.
Basically, it's like this. They had these future tax deductions all lined up. Think of them like coupons.
Okay, coupons. Got it.
And in 2023, they weren't sure if they could use all those coupons.
Right.
But then things changed. They realized, hey, we can probably use these to reduce our taxes in the future.
So they got to cash in those coupons.
Yeah, but in accounting land, that means recognizing a bigger expense in 2024.
So their profit for the year looks different, even though their business might be doing just fine.
Yeah, exactly. It's more about how they're accounting for past wins.
Interesting. It's all a bit of a shell game, isn't it?
Sometimes it feels that way, yeah.
All right, moving on. Let's talk about cash flow. That's the lifeblood of any business, right?
Yeah.
So how's Tesla doing there?
Right. So you want to know, were they swimming in cash or just barely scraping by?
Pretty much, yeah.
Well, the good news is the 2024 10K shows they had a nice jump in net cash provided by operating activities.
That's the cash coming in from their day-to-day business, right?
Exactly. And it went from $13.26 billion in 2023 to $14.92 billion in 2024.
Okay, so a pretty healthy increase.
Yep. And the September 2024 10Q backs that up. The first 9 months of 2024 looked really good compared to the same period in 2023.
So they're making money. That's good.
Yeah.
But what are they doing with all that cash?
Well, they're not exactly hoarding it.
What are they doing then?
Investing. Big time.
In what? More factories?
Yeah, actually. The filings talk about some major planned increases in capital expenditures.
How much are we talking?
They spent over $11 billion in 2024 alone.
Wow.
And they're projecting, get this, between $8 and $10 billion each for the next 2 years.
That's a ton of money.
It is. They're really going all in on future growth, global projects, expanding their manufacturing, boosting their AI capabilities.
So more gigafactories, more robots.
You got it.
Makes sense. But all that spending got to make you wonder about their debt. Are they taking on too much?
Yeah, that's a valid concern. As of December 31st, 2024, they had outstanding debt of $7.91 billion. And on top of that, total minimum lease payments of $7.05 billion.
That's not insignificant.
No, it's not. But it's important to look at that in the context of their assets and how much cash they're generating. It's like having a mortgage, right? Big number, but if you have a good income, it's manageable.
Okay, so they're not drowning in debt, but they're definitely carrying a decent amount.
Right.
So to sum up this high-level view, they're still growing, but the pace is slowing a bit. Their profit picture is a little tricky because of those accounting changes. Cash flow is strong, but they're spending a lot on future growth. And yeah, they've got a fair amount of debt, but it seems manageable for now.
Exactly. That's the 30,000-foot view.
Okay, so now let's zoom in a bit. How about their different business segments? Obviously, their automotive business is still the main event, right?
Oh, absolutely. The engine that drives everything. And if we look at the September 2024 10Q, we get a glimpse of their vehicle production and deliveries up to the third quarter.
Okay, give me the numbers. How many cars did they actually make and sell?
They produced about 1,314,000 vehicles.
Whoa.
Yeah, and delivered around 1,294,000.
That's insane. But I remember reading something about some challenges in the automotive segment, like rising costs, right?
Yeah.
Especially for raw materials and batteries.
Yeah, you're right. That was in the March 2024 transcript. They talked about those rising raw material costs. And they were having some initial hiccups with ramping up production.
What do you mean by hiccups?
Oh, just like some inefficiencies.
Oh, okay.
It happens when you launch a new product or a big update to an existing one. It takes a while for the production line to get smooth. and it can drive up costs.
Right.
They were specifically talking about the refreshed Model 3. They were producing those at their Fremont and Berlin factories.
Got it.
But the good news is later transcripts, like the Q2 earnings call, they said those production costs for the Model Y in Austin and Berlin, they were starting to get closer to what they were seeing in Fremont.
So they're getting better at it.
It's like learning a new dance, you know? Takes a bit to find your rhythm.
Makes sense. Okay, so the automotive side is humming along, dealing with some growing pains, but still pumping out a ton of cars.
Exactly.
Now, what about their other segment that's sometimes gets overshadowed? Their energy generation and storage business. Is that just a side project for them, or are they serious about it?
Oh, they're definitely serious. And this segment is starting to really shine.
Oh,
The second and third quarter transcripts from 2024, they both talked about big jumps in gross profit for this part of the business.
that's good to hear.
Yeah. And even more importantly, the gross margins are really climbing. In Q3 2024, their gross margin for energy generation and storage, it went over 30%.
30%? Seriously, that's huge. What's driving that growth?
Well, it seems like demand for their energy products is really picking up.
Power walls, solar roofs, all that?
Exactly. The April 2024 transcript, they mentioned they were expecting at least a 75% jump in energy storage deployments for the whole year compared to 2023.
So it's not just a hobby for them anymore.
No, it's becoming a real contributor.
That's great for diversification.
Exactly.
Okay, and there's one other revenue stream we have to talk about. The regulatory credits. Are they still cashing in on those?
Oh, yeah, absolutely. In the October 2024 transcript, they said they made over $2 billion from selling those credits just in the first 3 quarters.
$2 billion, just from credits.
Yep. It's not their core business, obviously.
Right.
But it's still a pretty sweet bonus, like getting rewarded for being green.
I like the sound of that. All right, so we've got a good handle on their financial performance, the different segments, all that. Now, what about the future? What are their big plans? What did those filings and transcripts say about their key initiatives?
Okay, so one thing that comes up over and over again, cost reduction.
Makes sense. Keep costs down, you make more money.
Exactly. They're constantly looking for ways to streamline, become more efficient, bring down the cost of building cars and their energy product.
Okay, so that's one big focus.
Okay.
Now, what about their flashier technology?
You mean full self-driving?
Yeah, FSD.
Yeah.
Any updates on that? Are we any closer to robo-taxis taking over the world?
Well, Elon Musk, he talked a lot about FSD in those transcripts. He's definitely excited about the progress, especially with version 12.
What's special about version 12?
They describe it as a much more AI-driven approach, more end-to-end, and they have this very ambitious goal. They want to launch fully unsupervised FSD in Austin by June 2025.
Wait, unsupervised? As in the car drives itself with no human intervention.
Yep, that's the plan.
That's bold. Do they really think they can pull that off?
Well, they believe they have all this real-world driving data, and their AI algorithms are getting better all the time. They think that's the key to getting regulators on board.
Right, proving that it's actually safe.
Exactly, and they have internal data they feel really good about.
Okay, so maybe robo-taxis aren't that far off after all. But what about a more affordable Tesla? I know people have been asking for that forever.
Yeah, they haven't given up on that. Both the April 2024 and January 2025 transcripts mention plans for a more affordable vehicle. It's crucial, they say, for getting more people to switch to electric.
And they're still working on, like, next-generation platforms and stuff, right?
Yeah.
New ways to build cars.
Mm-hmm. Yeah, absolutely. They're really diving deep on the manufacturing side. Things like even bigger single-piece castings, they call it gigacasting, and those structural battery packs.
Right, those are pretty cool.
Yeah, they're all about driving down those production costs, making their vehicles even more efficient.
All right, so that's cars. But what about Optimus, the robot? Are they serious about that, or is it just a publicity stunt?
Seems like they're serious. They're aiming to have Optimus doing at least some limited work in their own factories by the end of 2025, and they're talking about maybe starting external sales sometime in 2026.
Wow, so we could actually see Tesla robots out in the world in a couple of years.
Potentially, yeah. And get this, Elon Musk thinks Optimus could end up being even more valuable than their entire car business.
Seriously. He actually said that.
Yeah, in that January 2025 transcript, he thinks it could be a multi-trillion-dollar market.
Okay, that's a big bet.
It is.
All right, now what about something a little more down to earth? Batteries. I know they've been working on those 4680 cells for a while now.
Right. Still making progress there. They're producing those in-house, and their big goal is to make them the the cheapest per kilowatt hour when you factor in everything. Manufacturing, raw materials, government incentives.
Makes sense. Cheaper batteries, cheaper EVs. Everyone wins.
Exactly. They're not there yet, but they're getting closer.
Okay, so they're working on cheaper, better batteries. They're innovating on how they actually manufacture their cars. They're developing robots, for crying out loud. It's like they're never satisfied.
Yeah, that's one way to put it.
But all this innovation, they can't be cheap.
Oh, no, definitely not. They're spending a fortune.
And you mentioned earlier, there are some risks they have to navigate, right?
Oh, yeah, a whole bunch of them.
Okay, let's talk about those. What are some of the biggest challenges they're facing?
Well, for one thing, the competition is getting fiercer.
How so?
Used to be just Tesla in the EV market. Now you have all these established automakers jumping in, plus all the new startups.
It's getting crowded.
Very crowded.
And what about regulations? Governments always seem to be struggling to keep up with new technology.
Yeah, regulations are a big one, especially for self-driving. It's like a patchwork of different laws at the state and federal level. Plus, Tesla's been having a hard time with those direct-to-consumer sales.
Right. Some states still require dealerships.
Exactly. It's a mess.
Okay, so competition and regulations, those are two big ones. What else?
The global supply chain. That's always a risk. We've seen how fragile it can be.
Yeah, all those shortages and prices going up and down.
Right. And for Tesla, the prices of things like lithium, nickel, cobalt, those are critical. They're used in their batteries.
So if those prices spike, their costs go up.
Exactly.
Makes sense. And I know cybersecurity is a huge concern for everyone these days.
Definitely. And Tesla knows it. Their filings actually talk about this.
They do.
Yeah, they say they're focused on managing those risks because their vehicles and systems generate so much data.
Right, it's a big target.
Exactly. And then there's always the risk of lawsuits.
Oh, right. I guess you can't be a big company without getting sued by someone.
Seems that way.
So what are they getting sued for?
Let's see. The filings mention a bunch of ongoing lawsuits, and there are information requests from different agencies, the NHTSA, NTSB, SEC, DOJ. It's a lot.
What are those agencies looking into?
Everything from vehicle safety, how autopilot works, their FSD system.
Okay, so the usual suspects.
Pretty much. And Tesla usually says, hey, no government agency has said we did anything wrong. But still, defending all this stuff, it takes time and money.
Right, it can be a distraction.
Exactly. And then, of course, there's a big one. The economy.
Yeah, that affects everyone.
Right. And Tesla's not immune. If the economy goes south, fewer people are going to buy expensive cars.
Makes sense.
So that's something they always have to keep an eye on.
Oh.
Interest rates, trade policies, all that.
Okay, so we've got competition, regulations, the supply chain, cybersecurity lawsuits, and the economy. Sounds like a minefield.
It's a lot to juggle.
It is. Now, let's get back to those financials for a minute. What about their inventory levels? Are they building up a bunch of cars they can't sell?
Well, the September 2024 10Q gives us a peek at that. Their total inventory did go up. It was $13.626 billion at the end of 2023. And by September 30, 2024, it was $14.530 billion.
Okay, so an increase. But what does that actually mean?
Well, their inventory includes everything. Raw materials, parts, cars in production, finished cars, service parts.
Right.
So it's not just finished cars sitting around. And they did mention some inventory write-downs.
Write-downs.
Yeah, it means the value of some of their inventory went down.
Why would that happen?
Could be a few reasons. Maybe some stuff became obsolete, or maybe they had to lower prices to sell it.
Right.
And those write-downs, they affect their cost of revenues. They had some in 2023 and 2024.
Okay, so that's something to keep an eye on. But overall, I guess an increase in inventory could just mean they're ramping up production, right?
Could be.
Okay, now what about their debt? You mentioned different kinds of debt earlier.
Yeah, so if we look at the September 2024 10Q, they break it down. They have what's called recourse debt. That's basically a line of credit. And as of September 30, 2024, they weren't using any of it.
So they have some wiggle room there.
Yeah, they had $5 billion available.
Okay. And the other kind of debt?
Non-recourse debt. That's usually tied to specific assets.
Less risky.
Yeah, less risky for the company overall. So for Tesla, this includes things like those asset-backed notes, debt related to their cash equity, and solar asset-backed notes.
Okay, so it's a mix of different borrowing arrangements.
Exactly.
All right, and finally, let's touch on stockholders' equity.
Okay.
How's that been doing?
The September 2024 10Q shows how it changed between June and September of 2023. Basically, their net income increased it, but they also had some other losses that brought it down slightly.
Okay, and just remind me, what does stockholders' equity actually represent?
It's basically what's left over for the owners after you subtract all the liabilities from the assets. It's a good way to see the overall financial strength of the company.
Right, right. Okay, so we've really gone through all the details of these filings. Now, the big question, should someone invest in Tesla right now?
Right, that's the million-dollar question.
Exactly. And I want to emphasize, this is just our take based on what we've seen in these documents. This isn't financial advice or anything.
Right, this is just our analysis.
So, what do you think? Is Tesla a good investment at its current price?
It's tough to say. On the one hand, they have a lot going for them. They're growing, they have strong cash flow, they're investing in some really exciting technologies.
FSD, Optimus, better batteries.
Exactly. And their energy business is doing great. But there are also a lot of risks. The competition is intense, those regulations are tricky, the economy is unpredictable.
And they're spending a ton of money.
Yeah, and that's the thing. The market probably already expects them to be wildly successful, especially with things like self-driving. So for me, it comes down to this. Are you willing to take on a lot of risk for the potential of a big reward?
Okay, yeah. It's a high-stakes game. What about you? What's your take?
Well, I see a company that's not afraid to push boundaries. They're trying to change multiple industries at the same time. Cars, energy, robots. That's impressive.
It is.
And they have the resources to do it. They're not just some small startup, but like you said, they're spending a lot and they need to deliver.
Right.
So for me, investing in Tesla right now, it's a bet on their vision. Do you believe they can actually pull off all these crazy ideas? Can they stay ahead of the competition? Can they handle all those risks we talked about? If you think the answer is yes, then maybe Tesla's a good investment for you. But you got to be comfortable with some uncertainty.
Definitely.
Okay, so to wrap up, what are the key takeaways from this deep dive into Tesla's world?
Well, we saw a company with good growth, strong financials, but facing some serious challenges. And they're making huge bets on the future.
Yeah, it's a fascinating story.
It really is.
And we hope we've helped to make these complicated financial documents a little easier to understand.
That was the goal. Now, before we go, one final thought to leave you with. Think about all those investments Tesla's making. AI, manufacturing robots. What do you think will be the biggest surprise for investors in the next few years?
Will it be something amazing? Something terrible? Will FSD finally become a reality? Will those robots actually work? Who knows? But it's going to be interesting to watch it all unfold.
No doubt about that. And as always, we encourage you to check out those source documents yourselves if you want to dig even deeper.
It's all there in black and white.
Okay, well, thank you for providing such excellent sources.
My pleasure.
And for joining us on this deep dive.
It was a great discussion.
And thank you all for tuning in to the deep dive on the 4 Quarters and 10K podcast.